Hi everyone, welcome. Today we're going to be talking about some important insurance terms. So at the end of this discussion, you should understand what an insurance policy is, what premium is, what a claim is, deductible, coverage limit, as well as out-of-pocket expenses. Let's get to it. So an insurance policy, so this is the document that describes exactly what's covered, what's not covered, how much is covered, how much you'll pay for it, all the details of your insurance. Insurance premium. This is the amount of money you pay for that insurance coverage, and you usually pay that every month. Sometimes it gets paid some types of insurance get paid every 6 months, but your insurance premium is how much money you pay in order to have the insurance. For example, if you get a letter and it says, hey, your insurance premiums are increasing this next year, that means that you're going to be paying more each month for your insurance. An insurance claim. So this is where you've gotten into an accident or there's something that's covered by your insurance. You let your insurance company know, hey, I want to take advantage of my insurance. That process is called claim, and the process is called filing an insurance claim. And that's just where you're asking, hey, you guys should be helping me pay for this. Help me pay for this. There'll be a lot of details. They'll ask for pictures and details about what happened so they can determine how much they need to help out and pay. Insurance deductible. So this is the amount of money that you pay during an insurance claim up front. So every policy will have a deductible. That's not true. Some policies will have a $0 deductible, but most policies have a deductible. And what that means is when you get into a car accident or have some other insurance claim, you have to pay that amount of money up front. And auto deductibles usually range from $0 to $2,000 per accident. So you can choose that range wherever you want to be in there, but having a lower deductible means that you'll pay less, the insurance company will pay more, which also means that your insurance premiums will be higher. It'll be more expensive for you to pay less. So having a high deductible means that, hey, you're going to pay that amount. So that kind of takes it off the plate of the insurance company. That lowers your premiums. But that might also mean if you have a $2,000 deductible, if you get into an accident and only cause $1,900 of damage, your insurance won't kick in because that first $2,000 is for you to pay. And typically you have to pay your deductible either typically before your insurance company will kick in their part, or they'll just pay anything after that amount. Sorry about that. Which means you need in your emergency savings account, you need to have at least enough money to cover all of your deductibles for all your different insurance. So if you're wondering, hey, how much money should I have in my emergency savings account? It's typically considered 3 to 6 months of income. But before you get to that, the first thing you want to jump to is make sure you can cover your deductibles. If you get into a car accident, you need to come up with that deductible quick, fast, and in a hurry so your insurance company can pay out the claim and get you back to 100%. All right, coverage limit. So each type of coverage has a maximum amount of money that an insurance company will pay out on a claim. What this means is, for example, we've had some of these already. Your minimum property damage liability has a coverage limit of $10,000. The insurance company will not pay more than that towards a claim. And each type of coverage typically has its own limit. So if you get, property damage has its, bodily injury has its. We'll learn about other different types of insurance, and they all have a different coverage limit. You get to choose how much limit you have. So you can have a larger limit, which means the insurance company is going to kick in more money during an accident, but it's also going to be more expensive insurance. Out-of-pocket costs. So after everything is said and done, out-of-pocket costs are any money that's left over once the insurance is paid its portion for you to pay on your own. So say, for example, you crash into something and you cause $15,000 in property damage. Well, your minimum property damage liability insurance will kick in $10,000. The remaining $5,000 is out-of-pocket cost. Now, whether you consider your deductible out-of-pocket cost, typically people do, but here we'll be talking about it in terms of just that money at the end, although it's reasonable to consider your deductible out of pocket because it's coming out of your pocket. All right, my friends, that's it for our important insurance terms. These terms will be important for all types of insurance. You'll hear the same terms for homeowners, renters insurance, auto insurance, health insurance, life insurance. These are all very similar terms. All right, my friends, have a great day.